Hello and welcome, as it is the completion of the 24th day of March 2019. My name is Derek. All bets trades of the like within each his own risk and their own reward. I'm going to do one of those comparisons like I did this morning in the crypto day morning. The NASDAQ, as it was at what you call the NASDAQ bubble or the boom cycle, definitely. How long did it take to go from 1400? Or 1200 even area up to 5000. Well, I see it lifted off from that point in October of 98, and this top was March of 2000. The fact that it did it in a year and a half is spectacular in itself, but it still took a year and a half. And then after the move was over, it had a decent sized decline. And how long did it take to break established support at 3000? Well, 1, 2, 3, 4, 5, 6, 7, 8 months. Hey, that's pretty quick in itself as well. And as the market moved, it went down to like 807. So be it. You have to retrace. And then it went sideways and up, and we had a lot of interesting moments as it's doing it again. Just keeps on going higher. But as I talk about the quote unquote NASDAQ bubble, where did it come from? And even this only shows so much data, I think. However, it's a straight up move from July 1985, from 113 to 4,500. Now, this is a little concerning, is that its gain was still only like almost 40 times. Did it do it in 2 or 3 years? No. It took 15, but 15 years to do a 40x move in traditional markets? Pretty near impressive to say the least. But wherever you count this low, key high, key low, and now it's obviously looking to make a new leg higher. It's still barely above previous high considering the point. Wherever the low is, at least 115 to here to point low, it's barely broken resistance as I look at this. Switching on to theta. For theta to go to 1400 to 5000 took about, at least from this liftoff point, it did so at the end of January, so start of February. This happened on March 10th. 5 weeks? 5 weeks? And the retracement breaking 3000, well, that just happened. And considering the top is March the 10th, 2 weeks. 2 weeks? That's how long it took to break. It's the exact same established support of 3000. But as far as theta is concerned, okay, so we've seen the point A high, the point B low. Well, the Nasdaq went down to like 800 even, but that's a different market. It's been looking for a while like it's been wanting to retrace lower for several days, and it still looks as if that's the case, but support has just been barely broken. Keyword barely. It does seem on a conservative level like it should at least come back to where it came from in here. I'd have to think in the mid to high 24s, like 24.75 is the ballpark area that I'm looking at it within here. And yeah, a lot of times it can pierce into it well, like 23.50. And that's just the next key area. For if I look at how markets move, would it surprise me in the slightest if it goes further? I hope it does, but does it surprise me? No, and I'm not saying this because that's what I want. But spots where maybe it comes down like this, and then just maybe hangs in and does something like this, and then next thing you know, What's going to happen is something that's going to force me to do something like this because it just goes hog wild crazy. And then just keeps on doing something in that nature. What's going to do what's going to do. But overall, when it comes down to it, I understand the market as this is a key high, this is a key support, retest, retest. Where's a higher low from here? Well, I mean, this is the. I guess you'd have to say this is your must hold area here. Somewhere around 1500 even. But it's not like I've never seen that happen before where it does not go down there. I mean, it's very common that it does. But in market dynamics, it's got to do that, break down significantly lower, or go higher. And in something like that, if it just finds the support in here, this could happen anytime, this way too as well. But as I've talked about many times with my trading strategies, I'm never trying to predict the next movement. At least it's very rarely ever at all. Do I ever place any type of wager now for what's going to happen in the next few minutes, hours, or even the next few days? That's something I don't do. I'll always be ready to trade the markets based on its movements. As far as this is concerned now, I got buy orders all over the place. Hence, of course, why I wouldn't mind if it did even come down here. But the market does what it does. But just by understanding market psychology, I can get myself in the best positions so that if I'm at the spot where this happens, then yeah, everything, a bunch of buy orders are going to come in, which is it's always nice to have happen because that means sell orders here, here, and then the one up here would all hit. And I also realize that it could go up. It's just so obvious, but it's how you play it. Markets go up, markets go down, or they do neither. They really go sideways. And just by ready to do what you need to do, if I come in, okay, sell order hits, and then next thing you know, it does something like this. I plan on doing a lot of buying back here and then starting to resell again as it breaks these resistance levels. DGB, the same thing. And a lot of times I'll see something like this 300. I've got a line in here. I've had that in there for a while. Well, what do I see on the message of the market after the multiple red candle down move from around 358 down to about 315? Well, day number 4, or we finished 3 days of this just going sideways, pausing its movements. Yesterday's day, wow. A high of 318, a low of 312, a differential of 6 points, almost 2%. And when you can barely see a candle like that, and that's 2%, that means just an everyday average one. An average day, like run the mill day like this one, has a low of 248, a high of 261, differential 13 points. 13 on 24? Well, 12 point, it's 5% because 24 4.8 would be 10 because I'll take 10% of the low for a 10% volatile move. I take the differential and then I take its differential from its low. But throwing that part aside on the volatility, it's had the movements down. Buyers really haven't came in and decided, yeah, let's drive this baby up. I mean, they still can, but there could very easily be another leg lower. And it's had enough time to correct on the shorter term via that of the 4. Which we can see here is caught up with the 18 well enough. Well, the way I look at it is, if it's going to break through, I wouldn't be surprised if it pierced through this line or it pierces extra on 303. and therefore maybe come. I mean, it still to me would quantify as coming back, but I wouldn't be surprised if it comes closer to 291 or 292. And as a trader, the bigger the moves up and down, and I want them both, well, the better. And I want to finish this off within PivX. For if you decided right here when it was 27,000 in July of 2018, even for that matter, back in here when it was 49, you should probably be up right now in profit. I mean, especially if it's 27 or 28 or 29. When you have moves like this, and especially I guess if it's on PivX, or I mean if it's on Bittrex rather, but when you have stuff like that, this, you have spots where the market can hit this low, and even intra move meaning within the primary uptrend. You have this, then you go to this high, this low. We're in a market condition where you go from 24,000 to 18,000. What would happen if a stock market, if we seen the Dow Jones at 18,000? I mean, that's where the Dow is right now, is 25. I believe so. But regardless of the fact, if it loses its exact same percentile to that, which again is about the same, 18,000 Dow, if we were to do it in 4 days, then what would be been said? But what happens if the Dow were to have, say, an up day of 49.23%? Go from 15,000 Dow to 23,000 and change in one day. Yeah, that just doesn't happen in those traditional markets. Although you can easily find individual stocks that can do 40% in a day. But that aside, after this low, it goes up to this high, back to this low, up to this high, down to this low, to this high, to this low, and then all of these that happen. Now, of course, it's volatility 21. You can only be planned for like 8% moves in here, so maybe you don't get much on it. But when it comes down to it within these markets, they go up fast, they can go up fast. And it's had a long time of recover, a lot of time since its top, but this is something that went from 1,000 to, we'll call it 175,000. That's about 175 times gain. And it did it in a few weeks. At least the primary move from this decent week where it gained 410%. And then it followed that week with a 118% move, and it still wasn't done at that point. And that's the wildness that it has had. So since that point, the choppiness and the great trading that can come into play, because I talk about how decent some of those moves were. Well, these decent moves are nothing more than within its correctionary phase on the weekly. Now, that's it. It's not much at all, but there still is moves where you go from 14 up to 26 that you can still profit for okay size volatility. And you have this low, you have this high, you have this low. All of the trading that can be done within here, just phenomenal. Within just looking for the numbers. And you don't even need to look at charts or follow charts. Just realize that, okay, if I buy in now at 22, maybe I'll look to sell at 32. Or if you're going for big volatility, 35, 38. And I'll put a buy order in maybe at, say, 13. And then just wait. And let the market do what it needs to do. And if you were in here, say, selling here, selling here, selling here, selling here, selling here, selling here. Well, the market has went down as far as here, which meant all your sell orders from like this point higher could have been bought back. And these ones here, you just have to let them fall in the dust sometimes. So be it. But breaking above this resistance, this thing, I mean, you never know how much this can fly when it's ready to do it. And because it's had a very long consolidation point, very close to 2 years now, and since the high, where it had this wild move here, a little bit of a down move again, a little bit of a sideways breaking above, could be wild. And when I look at the altcoins, especially when I look back at so many of them recently, at least amongst the older ones, like the Litecoins and the digital notes and the Moneros and so on and so forth. That, well, let me just start off by saying that I started trading markets February of 2017, which was pretty much when they all started to get going. And before then, a lot of them were in downtrends, and they weren't as wildly moving. For it was March of 2017 all the way to March of 2018 when the markets and even April for that matter, where the markets were just extremely wild and volatile, but mainly at different times, like March all the way into June. But there were these, just like we've seen in here. What happened when they were actually going down is they had a lot of productive bear market runs, and this was very prototypical of the altcoins. Not this move so much, albeit yes. This topped a lot earlier, as markets normally topped in June. It's just it had a huge run before then that it really was up so much it couldn't sustain another short term higher run. But the volatility was magnificent. And yes, it's been really dry. Straight down has been a lot of the moves back in 2018. Pretty much since the April Fool's rally finished, it's been very dry volatility. And that's, of course, after Bitcoin topped. Well, I noticed that after Bitcoin topped before the last time, and I'm going to finish off by showing the Bitcoin chart. The markets were very volatile as far as the altcoins during its early stages in here, when Bitcoin was still holding at this very high level. And then came this period here. Right around here, that's when the volatility for altcoins really took a nosedive down. I mean, only to a small degree, really, because it was still okay. But in here, as Bitcoin was grinding its way higher, altcoin volatility was much lower. For in here, you could have been trading crosses. Maybe you might go 6 weeks or 3 months without making a trade. Or back in here, when you were trading it, you were just getting wild moves, making trades all the time, but nowhere near as much anymore. And then that remained all the way until about here. And again, it stayed in place up until roughly around here. And during this point, altcoins haven't done much. But if Bitcoin is going to be going much higher, which for myself, I think it's going to, hence the reason why I'm holding it and trying to gain them. Thus, when I talk about altcoins, that's buying and selling, that's just to gain them, of course. But in the situation of them going up to these, making a new high, do I think it's safe to say that altcoins will regain at least in somewhat comparable volatility of its past of extreme moves? Maybe about the same, almost the same, or even more volatile? And I have to think yes. For if Bitcoin is going to move up to, say, this line here at about 75,000, then that's going to take right now on Bitcoin a 20x move. So now this altcoin is going to go up 85 times. This other altcoin is going to go up 217 times, with wild swings up and down along the way as it gets to that journey. So therefore, because that is the long-term bet that I'm playing, as I talk about, I'm not trying to predict short-term moves, but I most certainly am trying to predict the long-term moves when holding the Bitcoin by, of course, still holding it at least at the level that I am. So, uh, that's really what it comes down to. I expect that there's going to be a time happening when we're going to be reliving 2017 all over again because markets go up, markets go down. And of course, there's not much. There's no data for all how altcoins really would have traded in here. But I would have been curious to know if, like, when was the actual second ever coin traded that was not Bitcoin? What was the second ever cryptocurrency that was ever traded on the market? That I don't know the answer to that, but I'd be interested to know its answer. Thank you for tuning in. Have yourself a great day. Bye bye.